Hey guys, what's up? Where's Jax? There's Jax. Hey Jax, thank you for making an appearance. That was nice, Jax. You got to come over here so I can put your leash on, though. Beautiful day here in Austin. Everyone have a good week. Let's look at, I want to talk about a few things today. Let's see how the market finished up first and foremost, and then we'll look at ULTY, YieldMax, and the single stock high yield funds. But then after that, I wanted to talk about the new F.I.R.E ETFs that just came out, and just whatever else. If you guys have any questions, you guys can hit me up in the comments. Okay, so let's start with the market. Jackson, he's getting a stick to chew on. You'll probably hear it in a second. Nice rally. S&P closed up 8 points. NASDAQ closed up. Russell was, Russell kind of looks, Russell was the strongest of the bunch today. Closed close to the highs. Great job. Check out VIX. Volatility is now bearish, which officially means Max's volatility trend following system has gone back to bullish on the stock market. Just as of right now. So there's VIX, and here's VIVIX, or about an hour ago, or at 2 o'clock, it met the final qualification. So an hour ago, I guess. But I mean, the last time it went long, it went up for a little bit, then came right back to where it started at. I mean, the market's just been grinding. The last time it went short, it didn't make that much. It actually lost, same thing. The market actually rallied a little bit. Anyway, it's one of many things to look at. All right, so now let's look at the Alti-verse. Here's the Alti grid. It looks the same as yesterday. The Alti grid shows what kind of trades Jay has on in and what companies. Column O is the name of the company, the ticker. Column N is the type of trade, and they're all callers. Too long don't read as they're all callers. Now, he has on a call spread in Mobileye, but a call spread is synthetically a caller. And he has an iron condor in Disney. And everything else is callers, which are great trades. Callers, just for those who don't know, is it's just a covered call. It's a covered call with the addition of one option. So a covered call, of course, is 100 shares of stock and a short call, usually an out of the money short call. Stock plus short call. Well, a caller is stock plus short call plus long put. So, and usually the way it's constructed is for a credit. Usually the way they do it is you take in more that maybe you sell the call for $3, you buy a put for $1. Anyway, what that does is it keeps your loss from being unlimited on the downside. A covered call is just like stock. Owning stock, people don't realize it, but owning stock is technically naked. Naked just means you can lose down to zero. Naked means your risk is unlimited. So covered calls have unlimited risk. You can lose down to zero. Callers do not have unlimited risk. But anyway, so he's gone to callers, so that's great. Now let's look at the Alti-verse. Now look at this. Great day, Alti. Look at that. Up 70 bips. You got to love that. Now the average was up 2.5, if they just had shares. But anyway, that's great. That's really good. Look at all these winners. They're really hitting their stride as far as picking winners. Well, plus the market's blowing up. But the market's not, the indexes aren't really just in a straight melt up. Well, not in the 30-minute time frame, probably let's check the daily time frame and see if my statement's even true. But I don't think so. Even in the daily time frame, the past couple of weeks, the market's basically sideways in the daily time frame. Well, you have, okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. In 12 days, it's basically gone. No, it's gone nowhere. Went up, went down. So it's not like the market's in straight melt-up mode, and it's the indexes aren't. But the reason you know that Alti, Jay, or whoever's managing Alti, they're doing a good job picking stocks is because look how many more winners they have than losers. When if you just look at the index, it ought to be about the same because the index is right about, right about where we started, 2 weeks ago. Anyway, okay, so that's the Alti-verse. Should be interesting to see what he does, what kind of trades they put on today, and how they get ready for next week. There wasn't any new stocks in there today that weren't already in there yesterday. All right, now let's look at the index buffer report. I love these index-based funds, and I mean, gosh damn it, look at freaking just right when I stopped covering Defiance, they start doing a lot better, and that wasn't why I quit covering them. They're the best yielding funds ever. I think triple QI or IWMY may be the highest yielding non-leveraged funds to ever come out, especially now that Jay's he's tweaked the formula a little bit where they catch a little bit more upside, but they don't make quite as much yield. Well, anyway, you can really see the upside in the buffer report. WDT beating the parent. Now, of course, to be fair, JEP I beat the parent, as did I Spy. But I really like to see this too. My favorite kind of is because I like tech stocks is triple QI. There's never been an income fund like that. But now, I mean, it was the first one. Now there's lots of them like it. There's QDTE, there's F.I.R.E, there's lots of them that do basically very similar type stuff. But I like the idea of owning the index, and I like the idea of maximizing the yield. I don't think there'll ever be a higher yielding non-leveraged NASDAQ ETF than triple QI. Like I say, and then the old formulation of triple QI when it used to pay 60 or 70% easily. Of course, as we know, it had problems that comes along with the 60 or 70%. So anyway, Jay's made a tweak. So the people I've talked to, though, one guy I talked to, I mean, he's upset that it's not paying as much as it was because he's using it for yield like you're supposed to. He's not going to sell it or anything, but his yield went down. I mean, he has plenty of growth stocks. He put aside some money to try to earn an income on. He already has all the growth stocks covered. He's one of my good friends, but I told him about Alti, and I think he got him some Alti. All right. So over here in Russell land, a lot of underperformance just because Russell's up so much, but that's fine. The best looking one of all of these is IWMI. Great job. Of course, Maxi, and look at USOY. Now that's really good. Okay, we got to pull up a chart on USOY. Now I'm so sorry. Right when I quit covering Defiance, they start becoming more interesting. They've always been great funds, but they're I guess this isn't that big of a deal. USOY just bounced from the bottom Bollinger Band to the top Bollinger Band, but that's been a pretty nice week. What do you guys think he'll do next week? Go the other way? Probably. Or who knows? Probably depends if something bad happens over the weekend. Boy, this weekend would be a good weekend to have a hedge on. I mean, I have one on at all times. But at weekends, whenever there's a war in Europe, just in case something happens, and we open down. I'm knocking on wood when I say this, but we opened down 5% or something Monday morning. It's good to have on a put if you can afford, especially if you can find a way to do it without bleeding to death. I'll make content on how I do it sometime soon. Okay, let's see here. All right, well, let's look now at. Here's what I wrote. I'm going to see who all is here. No one's here. Doesn't look like. Oh yeah, tons of people here. Okay. No, I'm not holding ULTY currently. I did a whole video on why I don't have it. I have ULTY. I do ULTY every day. I've been doing ULTY myself for years. Those types of trades. But what I've explained in that video is if I ever became incapacitated or too old to trade or something, I would probably get then right now I'm my own income fund. All right, so Jeffrey, thanks for being here. Bought a bit of Alti this morning. That's awesome. What did you say, retire? Defiance or Roundhill? If I had to pick Defiance or Roundhill? Well, it depends. But if it's for upside, I'd say Roundhill. But if it was the only fund I could pick, I would say Roundhill because it gets more upside, and upside's the most important thing. And the income doesn't matter. But if I could allocate like I do, when you use something that pays twice as much, you can use half the amount to get the same amount of yield. So I would rather use half the amount of Defiance or less Defiance. That leaves more room for a growth stock. So in an allocated portfolio, absolutely Defiance. I just want whatever's the best, purest yield. But if it was the only fund I could buy, for sure, Roundhill, because Roundhill in a bull market, Defiance in a bear market. Let's just say that. If we got in a bear market, I'd switch to Defiance. But in a bull market, you want Roundhill. All right. If it's only, but that's what's so unrealistic about these. Hang on, Jackson, where are you at? Oh, he's inside. That's good. Well, because the mailman just pulled up and he goes ape shit. Okay, Jeffrey, I'm glad you got some Alti this morning. So you guys are saying XDT. Oh, we got a Sooner here. Okay, investing Sooner. Okay, yes. So investing Sooner says, Max, can you explain what changes Jay made to triple QY, WDT, and IWMY that helps them capture more upside? What he did, without getting too technical, because this isn't an option show, he just turned down the volume. He let off the gas a little bit. He set, in other words, he was going for what was he going for? A quarter point a day. Okay. And there's 250 days in a year. A quarter point a day times 250 days in a year is like 65%. And he was getting pretty close to hitting that. He lowered the target when he went to weeklies. He lowered the target to 15. Part of that is not just for more upside. It makes it easier to budget and pay the dividends on the weeklies, he said. But he lowered the target to 15. And I'm trying to think what else he's done. I mean, I think what they're doing is they're going a little bit. They're taking whatever they're doing, and this can be with any fund. Anytime a fund makes less yield, it'll get more upside. It almost always goes together. Yeah, T-Spy's a good fund. Hey Thomas, how you doing? I didn't see you down there. All right. Well, let me get back to here. I want to talk to you guys. Okay. I got a call from, I talked with Mike at Tidal, Venuto, and he's the guy that's always talk about him because he's the manager of Riser, RISR, but in a lot of other stuff. I mean, but he's a really interesting guy. He's really excited about some new funds they have out. Let me go. I'm going to go back to this other screen. Okay, so so he's excited about these, and I had a short video on it. I think a week, 2 ago when I saw the press release or saying, but I didn't really have any idea. But okay, F.I.R.E. I'm not this. My site doesn't have a lot of people that I think are F.I.R.E. I don't know, but I mean, I've done F.I.R.E. the whole idea of just hustling and trying to save more than you spend. And a big part about F.I.R.E. to me is the part I take from it is living off margin. You borrow to live off of. I mean, and I did that. I've done that for years, or did that in the 90s. And that's especially easy to do when you're trading covered calls, because you can create an income for yourself and you just write yourself a check every month, right? Well, I mean, so I've done FIRE for years. But so I think it's an awesome, I think it's an awesome deal. So these funds though, so here's what it is. So they've, without being a FIRE expert, they made two different funds. They made a FIRE wealth builder. So this would be growth. And then they made a FIRE income. So the wealth builder is called F.I.R.E. So let's just see what I do know about it instead of telling you what I don't know. Okay. So let's look at, let me think about the way Mike described it to me. He said it's a barbell approach to, well, one of them is a barbell approach to catching income, and one of them is a barbell approach to catching upside. And I thought this one was the upside one. The income target one, by barbell, he means he mixes in some really risky issues with some not so risky. And what they do is they use all the ETFs that they manage anyway. And there's no additional fee for this ETF. This is just a fund of funds. The way he explained it to me, there's no additional fee. So look, this fund right here, this is their growth fund. This has this Nicholas fixed income alternative. That's a cool looking fund that we've talked about several times. Jay talked about that. I know some of you guys are interested in that. Well, that's 7% of this fund of funds. Well, guess what? It also has 8% Alti. Well, that's 8% YieldMax. Okay, yeah, because YieldMax? No, that's Alti. Okay. Well, then it has Foley. I haven't heard of this one. I haven't heard of the interest rate hedge, but look, it has tail risk, Cambria tail risk, and it has triple QI, which I was just saying is my favorite. I mean, if I could allocate, so it's 6% triple QI, 5% tail risk. Then some gold. So GDXY, that's good to get some commodities in there. And then the Bitcoin option, that's That's BITO. And then we have Zomo. And then we have, of course, SoFi, probably THTA. Anyway, even if you don't do FIRE, this is an interesting fund to funds. Look at this other one. Okay, so this is called F.I.R.E. This one's wealth builder. So we would expect some, a barbell approach to, some risky and some not so risky wealth stuff. So in other words, Gotham Value Fund, there's not so residential REIT, not so risky, but then it's going to have in here some Bitcoin and gold ETF. Look at this one, a pre-merger SPAC ETF. I love this kind of stuff. I've never reviewed these funds. I don't know about Madison. I don't know if you guys do. Some bonds, some Bitcoin gold. Then it looks like they just have some GLD. It's just a spider gold mini. I think that's GLD. Why doesn't it have the symbols on here? Download all holdings. Oh gosh, this freaking. I'm sorry, my bad. It puts all of the ones I've downloaded in there. I don't know. I should have hit clear before I do this. All right. Well, then I hit it too many times. So whatever. What do you guys think about these funds? Here's my one thing. My only reservation about it is, and it's nothing wrong with it. This is a max problem, not a FIRE problem. But for some reason in the FIRE doctrine, they go for 4% yield, or that's part of it is to, so this fund that they built, this income builder aims for 4%. Now, Mike said that they'll get at least that. And it's looking like, and if you look at their holdings, they should do quite a bit better than that. But I guess they're going to rebalance and focus with the goal of getting at least 4. So that's great. And I guess that corresponds with the 4% rule. And of course, I get the 4% if you're trying to cannibalize your portfolio, but not too fast if you don't know how to sell options. But I think if you know how to sell options, or you know how to construct a bond ladder, or you're either good at fixed income or options, and you have couple million dollars, you don't have to. I don't know. I would just do it myself. But I mean, these are nice that you don't have to. So, of course, I think these have just been trading for about 3 days. Anyway, I'm going to see what you guys think about these. I want to hear your opinion. You guys know a lot more about FIRE than I do. So you guys tell me. Eric, on Yield Boost or Granite. Yeah, unless it earns a yield, I can only focus on so much stuff. So I try to only focus on the ETFs that have some type of option strategy going. So but I guess that is an option strategy because it's double leverage. Okay, well, good point. Yeah, nothing wrong with those. But when I say an option strategy, I mean something that pays me a payment. I like yielding strategies, but I mean those are awesome. I mean those are awesome, especially for people that don't have an options account, because that gives you options type exposure. So yeah, those are those are awesome. All right, what's Investing Sooner talking about? Thanks, Max, for touching on Jay's. Oh, yeah, no problem, Sooner. Man, the team hasn't had a great year, has it, this year? Man, it's depressed. I talked to a friend yesterday who's flying into town for the Oklahoma-Alabama game, flying into Norman, and, oh, my gosh, we're going to get stomped. I mean, our team is – my dad started taking me to OU games in 1974, so I was 8. I've been to most of them. We've had season tickets my whole life, and or off and on my whole life, especially my younger life. So, but this is the worst team. I remember we were really bad in the early 80s, about like this. We were really bad in the mid 90s, probably even a little bit worse than this. So, but we are not great right now. Yeah, and it's going to get worse tomorrow. That's right. I'm sure all these other people don't want to hear about Sooner sports. And plus, since I've moved down here to Texas, I'm a Texas fan also. I mean, not a fan when they play Oklahoma, but I watch Texas games. And so as long as one of them's doing well in the playoffs, I have someone to root for. Plus, everyone else down here is rooting for Texas. So you kind of you're going to have Texas on TV. Like, I didn't want to become an Astros fan when I moved down here, but guess what? You're going to become an Astros fan if you moved to Austin. So Austin's full of a bunch of Houston people. Austin's like not a bedroom community. Austin's like a place where people from Houston go to college and hang out. So yeah, any goals for my YouTube channel? Retire. I was just thinking about that today. It's funny you should mention that. And no, not that I can think of. What I was thinking is I need to make a list of 10 goals, a serious, nice list of 10 goals, and then sit down and do a show or something on it. But yeah, no idea. Just hopefully to keep growing and hoping my niche keeps evolving. I appreciate you guys being here today. I'm going to make sure I caught everything. So, no, I'm not holding ULTY. Yeah, I like that was good retiring dividends to bring up the Defiance or Roundhill if you had to pick talk. That was a good topic. All right, I'm going to go back over here and let's see what else I'm going to look at a few other things before I let you guys go. Okay. I still don't know why. So that's the income fund, and this is Wealth Builder. Is there something I'm not understanding? This Wealth Builder seems like has income. Yeah, aggregate bond. I guess that's what where's the wealth building in here? I think they're labeled wrong. I think this is the fixed income, right? Anyway, I mean, the market's closed now. We have till Monday morning to figure this out. But the whole time I was telling to you guys, I'm thinking, well, all right. Now, okay, here's what it is. The income fund has like more income in it. It's like the ones that are higher paying. The wealth builder has income in it, but like safe income. But I didn't really see much wealth building in here. I'm sure I'm just not paying attention. Where's the wealth coming from here? I mean, aggregate bond is good when bonds rally, but it's not a strategic income. Alternative yield, that's yield. I guess Bitcoin and gold. And gold, so it's Bitcoin, gold, long Bitcoin, long gold. Oh, yeah, he told me about this one, Academy Veteran Impact ETF. That's an ETF that it's a REIT, I think, and they only deal with veterans, so they have a really high rate of paying their mortgages off. I think it's some type of either REIT or mortgage type fund. In any event, still yield. Okay, Cambria Chesapeake Pure Trend. I bet you that right there sounds like that. Maybe they're getting their growth from there, because the rest are going to, and in value, okay, value you could get growth from. And then REIT is definitely income, and fixed income is definitely fixed income because it says it in the title. So it looks like they have about 4 or 5 ETFs that have potential to grow quite a bit. I mean, the Bitcoin and gold one, just imagine if they would have had that one this time last year, if this was a year old instead of brand new. And there's no telling how much a Gotham 1000 value would have been up in the past year, because that's just the 1,000 small stocks, and the small stocks have kicked into gear with the Trump victory. The Trump trade is the smaller stocks plus the DeFi. Well, really, it's just everything, but it's especially the smaller stocks. All right, so here's this Cambria Chesapeake Pure Trend. Let's look at this, then I'll see if you guys have any more questions. Then you guys can get out of here. I'm going to take Jax for a walk. All right, so here's this Cambria Chesapeake Pure Trend ETF. So this seeks capital preservation and long-term capital appreciation using proprietary systematic trend following strategy. Cambria Chesapeake Pure Trend ETF attempts to identify approaches in market trends across 4 macro asset classes: currencies, commodities, fixed income, and equities. The fund provides global long-short exposure. Wow. Okay, I love this fund now, but it's new and oh my gosh, I don't love it anymore. Forget about it. So I guess maybe, in the past, and it's the same thing that's happening in my trend following system. In the past 3 months, there hasn't been a trend. The last trend was in late July when the market rotated from bullish to bearish into August. But since then, it's just, it bounced and just ground. Anyway, okay, so, all right, well, anyway, this has potential. It has potential. I guess I need to do a full review on this. I've never heard of these guys. Cambria. Let's see what else Cambria has. See, I'm into these yield ones, but let's see if we've heard of any of these. I've never heard of any of those. Tail Risk, I have heard of this one. TAIL. Now, of course, it's all right. So this one, Cambria Tail Risk, seeks to mitigate downside market risk by purchasing a portfolio of out-of-the-money put options on the S&P 500 as well as treasuries to provide an income. Now, this one's actually done better than the trend following one. In the past 3 months, at least this one's up. Now, since inception, this has had a little problem. But, yeah, that's the way these funds are designed. All right, well, that's fine. So this Cambria Tail Risk Fund, TAIL, is not this one. Okay, that's the wealth one. They both look like income to me because they both have a lot of income. Yeah, okay, this one's all income, plus it has the Cambria Tail Risk. That's good. I mean, because the only thing that can mess up covered call funds and mess up like all of the covered call funds is a market crash, a lost decade or something. But in a lost decade, or your inverse funds will perform better, your tail risk funds. I think I really like this build right here. This income fund they have, this would be tough to beat. Because look, it has 8% Alti. A lot of people like Alti, but it's too risky. Okay. Well, so just get 8% Alti and get 9%, whatever this folium beyond interest rate hedge is, and then get 8% of some fixed income alternative stuff, and then do some REITs so you get some income from mortgage payments. Or those may be like loans. What do they call them? Those may not be REITs. That may be like where they package loans. But I mean, this has 6% triple QI, which is yielding 50, and it has 8% Alti, which is yielding 100. And then it throws in some 4% Beto. I mean, this thing is going to be a monster. And I guess the barbell approach is you have some really conservative yield, which would be like SoFi, THTA, which is that's the high PO strategy. Jay calls out high probability option strategy. I think this so-called this income fund is a really interesting fund. I'll be really interested to see how this one does. Now, and there's nothing wrong with the other one either. I guess I don't know. I don't understand enough about F.I.R.E to know about it. Hey, okay, I got one more favor before you guys go. Gosh darn, does anyone have Kamir's real email? I needed to email him, and I'm locked out of Discord right now. Would somebody tell? Well, okay, let me see. I'm going to see what you guys are talking about here. Somebody tell Kamir to email me, maxconvexity@gmail. Okay, you saw my interview with Sai and Jay. Nice job. Hey, thanks. I appreciate it. Thanks for watching. All right, so what does Chad want here? Chad says, I'm still waiting for YieldMax Defiance Roundhill to come out with an ETF that holds all or most of the covered call ETF that pays weekly. What do you mean that holds all or most? Do you mean that holds all or most of the yield? I mean, because that's out right now. It's called JEPQ. But they only sell monthly options, though. As far as the daily ones, anyway. All right, let's see what else we have going on. I thought Jay had been doing better with triple QI also. Nice how you got that out to him. Tweak. I wasn't sure if it's just harder to notice NAV depletion with the new weekly. No, it's not it. I don't think it's harder to notice if anything. Well, I don't know. That's a good intellectual question, because when you split it up into 4 times a month, part of the problem is the psychologically just seeing that big chunk coming out. If you split it up into, wonder if they pay daily distributions. You might not notice it all, basically. I mean, it's a good point, but no, it's still going to show in your total return. So even if you don't notice it and it doesn't bug you as much, but anyway, I think Chase, I thought it was fine before, because if I would just use less of it. I know it's powerful. I would just use less of it. But it seems to be a nice compromise. It's still paying about probably 80% of what it used to. And I've just noticed myself that it's catching a ton of upside. It's like an actual, just right when I stopped covering it, oh my gosh, QQY, triple QY. Well, it doesn't really look like it here, but you know why that is? It's because this doesn't have options turned on. So it's basically like you aren't even looking at it. So you wouldn't buy there. I don't even know why people look at it like this. Because if this fund didn't pay a dividend, I wouldn't own it. All right. So to look at it with the dividends not on the chart and say this chart looks like shit, anyway. But that's what some people do. I don't know. But anyway, what I noticed when I noticed this, it was last week. This day right here, it capped up huge. I guess that was after the Trump win. But it just seemed to me like it was catching more upside than it used to. And I can't really quantify it. Look at how far it got out of the Bollinger Bands. It stayed out 3 days before it snapped back in. where other times it's more like 2 days. I mean, but back down here, it had some strong rallies too, and that was with the old formula. Right here, it had a really strong rally with the old formula. Now, what day was that? That was June of this year. I mean, it's not like these things can't catch upside. But they can catch a lot of downside too. They catch downside in a hurry. I mean, that's definitely true also. I mean, here you were on July 11th, 33. Well, that's not the real price because it's split adjusted. But then just a few days later, you're at 29. I guess we could figure out that it's going to be even worse because you don't factor in the. So yeah, they can definitely do that too. I mean, like I say, I just don't know, what does that show anybody? That doesn't show me anything because, yeah, no, I don't buy that security. Stay away from that security for sure. That's not a security. Because there's no way you would do it without this. So, but I like to follow the trends of stuff. So, this, I guess what you could do is you could put a trend line on this. Something like that. You like technicals, and then as long as it's above that, stay in. But if it's below that, just get out and wait for it to go back above it, or wait for a new trend to be established. It won't keep going up forever. At some point, this thing's going to go to shit. Not to be too negative, but all right. Let's see what else you guys are talking about. All right. So did I answer that last one? Oh, yeah, I did. Yes. So, Max, thanks so much for going over erosion a few weeks ago. Totally fixed my reverse split angst with Tesla. I mean, don't get me wrong, reverse splits suck. I mean, I'm not a reverse split fan, but there's nothing you could do. I mean, I'm going to make a new video. I thought of a new way to explain it. I don't want to give up here, but give up too much here. But I'm going to make a follow-up video to that video you're talking about. By the way, thank you for a nice comment. I mean, I appreciate that for giving us a reference. Senior preferred. Okay, yes, exactly what it was. Senior preferred. One of my favorite ETFs, and it's not. I know about it for about the past 6 months because Jay always talks about it. But it's a great income ETF. It doesn't have anything to do with options. It's called SRLN. And they call it sirloin, like, sirloin steak, just for fun. But it's senior loans. It's a senior loan portfolio. But yes, that was a senior loan portfolio, mortgages on veterans or something. So yeah, what could go wrong? It's those are great. All right, yeah, hit the like button. I appreciate that. What's Retired Cop talking about? Great job with the interview, Jay. YieldMax is still doing exceptional. Yeah, enjoying the income. It's been a hell of a year. So maybe the theme of next year will be, let's learn how to hedge some of these nice profits. People have been in these for a year now, should be up. If you were in these for a year, you should be up at least 10 or 20%. I mean, even if you're in some of the lower paying ones, but it's been a great year. And if you're in F.I.R.E or something, you're up more like, I don't know, but you know what I'm saying. All right, what's Chad talking about here? All right, so Chad, okay, you want holds all the different funds from different institutions. Oh, okay, yeah. I got you. Do you mean like so are you talking about like, I'm still waiting for YieldMax Defiance? Oh, I see. You mean everyone, even, I don't think that'll ever happen because Defiance, YieldMax, and are different companies than Round Hill. But I wouldn't be surprised if they came out with and I don't have any inside knowledge, but I wouldn't be surprised if they came out with an all J fund or an all title fund, a title ETF where they own all, or it's just a fund of one of everything they own. But basically, they're giving that to you guys with this, more or less, with this F.I.R.E. I mean, you're getting their best ones. I can just tell by talking to the guy. He's really excited about it. And of course, I know he's going to make money, of course, but he's excited about it in a deeper way than making money. He's like Jay, and he's like me. We're really excited about people learning about finance and being able to invest basically like a generation ago. Only hedge funds and extremely wealthy people were able to access any of this type of money. And nowadays it's, we can get it. It's just a really exciting time. And so, and he was just excited. I think Mike didn't really know that much about FIRE, but he knows that a lot of people love it. And so they're trying to make something, what I'm trying to say with Mike, they're real consumer centric. They'll make whatever we want. If we tell them we want something else, they build it for us. That's what's so awesome about them. So, I mean, that's one of the many things. That's one of the many things I really like. Hey, Doss, thanks for tuning in. All right, what are you saying here? I've been on Coney and NVIDIA for a full year with the map. Yeah, they've all been. So with Coney and NVIDIA, you're probably doing a little bit better than 10 or 20%. But I mean, but you know what I'm saying? Just on the average, anything, and that's great because what's the rule of 72? If you average 12% a year, you double your money every 5 years. Just investing in the SPY over time gets you like 9%. You got to find 3 extra points of alpha somewhere. But getting some NVDY is one way to do it, and some CONY. Don't you wish you would have had some Misty with that too? My God. Oh yeah, Biggie. I haven't really talked about it much. No, but let's talk about Biggie. We were talking about another fund that paid 12%. What was that fund? Let me go back and read here. Round Hill T-Spy is a great fund. I'm glad Thomas likes T-Spy. Well, there's some new target funds from. This is one. Okay, the new target fund from YieldMax. Biggie's the first one that came out. It pays 12%. I was just talking to somebody else about something. Well, I know what's going to pay 12%. Mike, the guy from Tidal, told me that he really thought the fund that's aiming to pay 4% is going to be more like around 12. Okay, so with Biggie, here's all we have to know. The underline is the 50 biggest stocks. So that's the same underline as basically as a lot of other funds have. So the underline is just going to be big stocks, but the fact that they only pay 12% is going to allow them to get more upside than, like, say, Triple QT, which has the 100 biggest stocks. So basically the same, but pays 20%. That 20% comes right out of the upside. So without knowing anything else, if you want NAV return, go for pick ones with low yield. And if you want income, pick ones with high yield. But I mean, but no, Biggie, it's just out a few days. I'm excited about it just because it's cool. It's cool how many choices it's coming out. Now, there's so many funds that are similar. I'm trying to think why they put it out, but I know why they put it out. Because for some people, Triple QT and SPY-T that pay 20%, and FEPI and SBAL that pay 15, 20, 25%. For some people, even those funds have too much depletion for their taste. But they still need some income. But let's say they don't want to go down to a JEPI from JP Morgan that just pays 8%. So I think that's the niche they're trying to fill with BIGY. So let's say if you don't need 20 or 30%, if you don't need that much yield, take the lower paying ones, right? It's all about, remember whenever you're using these yielding ETFs, you are leaving a lot of upside on the table. So the idea is to use them, sure, but use just enough as you need, because you don't want to overuse them because it's costing you money. I mean, I don't anyway. I mean, if it was up to me, I would want to be 99.999% invested in growth at all times, and just have enough of these just to make whatever income I need. I mean, that's my only goal with these. All right, retired cop. We don't know. Hey, yeah. Well, I appreciate a retired cop. I'm gonna start showing that side more. For the first year of this, I was trying to be Mr. ETF and stuff, and the main reason I was in ETFs is because of their involvement with options. But the more my channel's growing and my niche is growing, I'm trying to slide over into my own lane that's different than Retire. It's different than Coach. It's different than Premier. It's different than anyone else, where we're learning how to trade like Jay. And with the access I have to Jay, but I don't only want people like that. I also want people like Tom, who knows. Tom is a very good option trader. I can tell by talking to him. He knows all about trading options, but he also knows all about ETFs. So I like, I want everybody, but I want to start focusing more, drilling down on more of the strategies, and not just so much making trades either. Putting on, I want to in 2025, we're gonna learn how to run two strategies at the same time that complement each other, and a bearish one and a bullish one. And it's not something that any of these funds are doing. We could do it at maybe we need to pick something we're super bullish on, maybe micro strategies or something, but have on so MSTY, run a bullish strategy on MSTY, but have on a constant hedge 24/7. Now we won't get as many dividends, most likely. Part of the dividends we'll have to pay for the hedge. We could also do this in Alti. But anyway, and this would make these funds, I think, a lot more attractive. Anyway, we're going to get into a lot broader and deeper stuff than we're into now. But I still want to cover when the new ETFs come out. Of course, I'm still going to cover them. And I want to, and I think the buffer report's good. I like to look at the buffer report every day in the Alti-verse. I love the Alti-verse. But basically, we could basically copy trade Jay, or it doesn't have to be Jay. It could be any other manager that's out there. There's all this stuff is public. That's what gets me going. I don't need hymns. I got this stuff. Look at Jackson. Well, Jackson there. Oh, he's being super sweet. He's probably ready to go for the walk. So why don't I let you guys go and take him for a walk? Jax, do you want to go for a walk? Do you want to go for a walk? Who wants to go for a walk? All right, guys. I'll see you later. Have a great weekend. Hit me up. I'm locked out of the Discord. Tell Kamir to email me, or somebody send me Kamir's email. All right. I got some good news for him. All right. Talk to you later.